So I thought we would make, so we have sessions about twice a month. We've been doing this for quite a long time, many years. And I thought what we would do today is make this session as interactive as we can. So we'll cover core strategy, start talking about that in just a moment. And then as we look at the live markets, any markets that you want to look at, any trading ideas you want to go over, we can look at them and talk about them through the perspective of the core strategy, the rule-based strategy that we go over here. Okay? Keep in mind that anything we're going to talk about today, we apply equally, as far as strategy goes, equally to any and all markets: stocks, futures, forex, options, bonds, crypto, you name it. And then any time frame or financial purpose, meaning daily income trading, weekly income trading, building and protecting that longer term wealth. Everything we talk about here as far as strategy goes applies equally to all of those. Does that make sense? And then if you're ready, we will dive right in. And you should be able to see the screen. What I thought I would share first is this picture right here. So the title of our session today is Trading Like a Bank. So if you start with, this kind of premise, this thought, right? I think one thing we can all agree is overall, major banks and financial institutions tend to make quite a bit of money in the financial markets, and their performance is really strong compared to the average trader and investor. Would we all agree with that? Does that make sense? And if so, and why is it that banks and, professionals, right? Wall Street professionals, financial institutions, why does that group make so much money and everyone else doesn't? That's the million-dollar question, right? Well, for me, I was able to answer that question because of where I started. And I started on the trading floor of the Chicago Mercantile Exchange many years ago, not trading in the trading pits, but right outside of the trading pits on one of the big trade desks there, right? Literally right outside of the trading pits. And my job was to facilitate order flow into those markets. I would take orders from banks, institutions, money managers, all that, and off we would go. But what I had in front of me is what? What was my world of information? You think of your world of information today, it's all through a computer screen. It's real-time or close to real-time news, all this data, all these indicators and decision-making tools. What was what did I have in front of me? In fact, what's the only information I had access to back then? And I had access to, the best stuff, right? Because I was on the trading floor. But what's the stuff that I had access to? What filled my decision-making lens back then? Yep. So buy and sell orders. What else? There was one other thing. Just people, right? It was just people buying and selling, and the orders. That was it. Nothing else. And of the people, you could separate those people into two groups. And the two groups are those who make money consistently and those who don't. So from there, I was able to focus on the actions of both groups and match up orders, buy and sell orders to both groups. And what you clearly see every day, every hour, every day, every week, every month, every year, is because what really hooked me into this business early on was I thought, and it really hit me, a big light bulb went off pretty early on. I said, wow, this is interesting. One group, right, the professionals, make so much money. They're right in their decision-making process. And as a whole, they tend to make a lot of money. This other group of Novice retail traders and investors are equally wrong in their decision-making process most of the time, and as a whole, either lose money or don't come close to meeting their financial goals. Right? So one group was doing really well, the other group wasn't. That's what I was noticing, and I had access to the orders, so you see it. Then I thought, wow, this is fascinating. How could one group be doing so well and the other group not, yet they're both buying and selling in the same market? What's going on here? How is this possible? And back then, I spent a lot of my time in the Forex markets. That's where there were two trading floors at the CME, and I was on the Forex. I was in the Forex area for a while. So you see that. Say, wow, how is one group doing so well and the other group isn't? And they're both buying and selling in the same markets. From there, I simply looked at the actions of both groups. Where exactly are both groups buying and selling? So I would bring a price chart over to the trade desk every day. Back then, people weren't really looking at price charts. And I would track the actions of both groups. And what you clearly see is that at key turning points in the market, one group tends to be buying, the other group selling, and vice versa. Does that make sense? And then I thought, well, this doesn't make any sense. Why would, obviously, why would novice traders and investors, why was one group, the professionals, so aggressively buying when prices are down, and the other groups either doing nothing or selling? Why were the professionals so interested in selling when prices are up, and novice retail traders and investors are either buying or doing nothing? That didn't make any sense. And it comes down to this. It's because one group understands that how you make money buying and selling anything in life, which is buy low, sell high, buy at wholesale, sell at retail, is exactly how you make money buying and selling in the financial markets. But the average trader, investor around the world doesn't. And think about that for a minute. Think about the average trader, right? How does the average trader make a decision to buy? What are some of the things that the average trader or investor want to see on the price chart before, or want to see? What's the evidence that the average person out there needs to push the buy button? News, so I assume you mean good news, yep. Green candles, yeah. Confirmation. What else? What are some of the things that the average trader or investor, what is the evidence that they want to see before they buy, or that leads the average person to buy? An uptrend, yeah, indicators. What about those indicators, Olsey? What do they want to see with the indicators? Yep. Yeah, and I agree with all. You're absolutely right with all those things. Exactly. Some sort of confirmation of what? What's the confirmation they're looking for if they're going to buy? Yep, higher prices. A trend, yep, trend established, yep. I think you meant to say trend there, yeah. Exactly. Now, think of the professional, right? The bank, the financial institution. Do they think like that? Is there evidence to push the buy button? Does it include any of the things that you just typed here in the chat? No. No. None of that, right? Exactly. They focus on what every successful business focuses on, buying at wholesale prices, selling at retail prices. And I'm sure, most of you have heard about, chart patterns like head and shoulders. I think I saw someone type in the chat, and triangles. And what are some of what are some of the patterns that that you've heard about or you think about? Yeah, flags and all that stuff. Right, all that stuff. Let me ask you a question, because I started on the professional side of the business, right? Elliott Wave, yeah. You think at Goldman Sachs or Barclays Bank or one of the big ones, you think they get together every morning before the markets open? They get all their big traders in a room and all their high-priced analysts and everything else, all their experts in a room and say, okay, guys, girl and women, hey, folks, who's found the head and shoulders patterns this morning? Where are the flags? Anybody have an Elliott wave pattern they want to share with us so the company can make money today? No, they don't do that. They laugh at that. So it's, in today's day and age of the internet and all this information, it's nice and maybe hopeful for people to think that there's all these strategies out there, all these different ways to make money and all this other stuff. But at the end of the day, as advanced as technology is, it is as advanced as all this information is, the one thing that hasn't changed is how you make money buying and selling anything. When buy low, sell high. When you buy, someone has to buy after you for you to make money. When you sell short, someone or a lot of people have to sell after you at lower prices for you to make any money. Does that make sense? Yeah, Pip, there's things like volume spread analysis and market profile and all that stuff. But again, most of those things have you looking in the wrong areas. The filter that you want to run everything through, and don't take my word for it, and don't take anything I say or anybody says as that's for sure, that works. What you want to do, in my opinion, it's just my opinion, run everything everybody tells you through the simple filter of how you make money buying and selling anything. Pure supply and demand. And if it doesn't meet that standard, you probably don't need to focus on it. So at the end of the day, if you look at the screen, we've got our little stick figures here, right? That represent supply and demand. Willing buyers on the bottom, willing sellers on top. In the middle, relative balance. Okay? We want to be able to look at a price chart of any market, any time frame, any financial purpose, and make sure as strong as we can, right, as well as we can, that what we're buying at demand down there near the bottom. When we're selling, we're up at near supply, and when price is in the middle, we're hopefully doing nothing. Because at the end of the day, it all comes down to answering these two questions. Where is price going to turn, and where's it going to go? And if you back up and answer those questions with objective logic on the first one, well, think about where price turns. And again, my experience with this comes from the trading floor. I had actual buy and sell orders from some of the big banks and institutions and all that. And so you see, price is going to fall until it reaches a price point where objectively demand exceeds supply. And it's going to keep moving until it reaches a price point where supply exceeds demand. So the turning points, we can conclude that significant unfilled buy and sell orders, supply and demand, cause prices to turn. And therefore, a lack of significant supply and demand or filled orders facilitates price movement. Does that all make sense? And I'm just the messenger, right? This isn't like nobody owns supply and demand. Even Adam Smith doesn't own supply and demand, right? Okay, I'm just the messenger. So what I try to do is come at you with, here's how the markets really work. All right. This isn't some fancy algorithm and this is another thing. I saw someone type in the chat earlier about algorithms. Yeah, there's plenty of algorithms these days, but any of them that work, right, are versions of this, aren't they? When you hear about some of the big hedge funds out there that are really market makers, and today have most of the people on their team are PhDs, not necessarily traders. So they're with lightning speed able to buy on the bid and sell at the offer. What does that mean, buying on the bid and sell at the offer? What's that strategy? What's buying on the bid and selling the offer? What is that strategy called? Just another version of buying low, selling high, right? Buy at demand, sell at supply. And look, as some of you may be new traders, I could see how it can be overwhelming for you today with all this information out there. But don't get caught up in that, and don't worry, don't stress. The good news is how you make money buying and selling in these markets has not changed since the inception of markets, and it's not going to change. You don't have to worry about that. It's very easy to get caught up and stressed out about, oh, am I keeping up with all the latest strategies and all the latest tools and all the latest this. Don't worry about that. Okay? Don't let that stress you out. That's not how it really works. All right. Now, so the goal with all this is, how do we see this on a price chart? Because a price chart, what you're looking at here with these stick figures, this is supply and demand, unfilled buy and sell orders, right? When price is low in a market, you have more people willing to buy. When price is high in a market, you have more people willing to sell, like the screen here. But that's because we're looking at a market here, a potential market here, through the eyes of unfilled orders. Where is the demand and supply? When we get to a price chart, which we can do right now, a dollar, what does the price chart show us? Or what do these candles on the screen represent? Filled orders or unfilled orders? This picture represents unfilled orders. This picture represents filled orders, right? Anytime you see a print on the screen, a candle on the screen, it represents filled orders. When a trade happens, you get a print on the screen. Therefore, think about it. Not only does the price chart not show you what you need to see, doesn't the price chart of any and all markets show us the opposite picture of what we're looking for? Everybody understand that before we move forward? The price chart shows us filled orders. That's the opposite picture of this. Okay? And we need to be able to determine where those unfilled orders are to answer these two questions. Where will price turn? Where will it go? Okay. So let's take a look. And for those that have been with us for a while, why don't we look at our Aussie dollar? Anybody still in, or anybody take our Aussie dollar trade from the last few sessions? That would be this short right up here. Okay. So we had a supply zone. We went over. Price came into our supply zone and has fallen since. But I want to spend just a few minutes talking you through this one. Anybody take this one? If not, I can also move to one of our other ones. Let's walk through this, and then we'll look at some upcoming opportunities because there are a number of them. So first, to answer the question, where will price turn? So we have our supply zone here. And here price comes right, supply zone. Very little trading, strong drop away from the level. Notice the small amount of trading activity here, see that? The fact that you get very little trading activity here suggests that you're up in this area, right? What this picture shows us is we have the potential for the most activity, but you don't get it because of all this competition to sell, right? So it's going to look something like that. Next, we have all of this trading activity down here. What does this trading activity down here represent? What does this trading activity down here represent that I'm circling? Keep it really simple. Filled orders or unfilled orders? Does this stuff that I'm circling here represent? Yes, filled orders, which is this area in the middle, which is also where price spends most of its time. Therefore, when price rallies back up to the supply zone, we expect it to turn at supply because that is up here. And then we expect it to fall, right, fairly quickly or with ease because it's going through this. In here, you don't have significant opposing demand, which means price should be able to move through that area. Filled orders, this area facilitates this price movement. Does that make sense? Everybody clear on that? Now back to the two groups for a minute. Remember we started kind of the story with, for me, it was all about noticing that there's two groups at play here. Those who know what they're doing, those who don't. Think about when price was up here, right? And this is where, according to the strategy that I go over with you here, we want to sell short. So who is selling here? Who is likely selling up here? Who has an account size to cause a supply zone like that, a move like that? Who's the seller up here? Banks, financial institutions, the smart money, right? The problem is they have too much to sell and there's not enough buyers. That's why price falls. Fast forward over here to the right, when price came back to our level, who is buying here and why are they buying? And guess what? You don't have to answer it in the chat because you already did. Remember a few minutes ago when we talked about how do novice traders and investors make a decision to buy? Remember all the things you wrote in the chat? Aren't they all present here? Got a nice uptrend underway. We've got green candles. There's probably some good news that helped bring price up into here. What's the mistake that they are making? The overall mistake that they are making is that they don't understand that how you make money buying and selling anything in life is exactly how you make money buying and selling here. How do we know that for sure? Because they're making the same two mistakes that every novice trader makes. Number one, they're buying after a rally in price. Big mistake. You ever do that in any other part of your life? Do you ever walk in the grocery store, the market, and say, to buy your favorite ice cream, and you say, and you get your ice cream, you bring it up to the register to check out and pay, and they say that'll be $2.50. You say, no, you don't understand. I love this ice cream so much. I know it's only $2.50, but I want to pay you $10 for it because I love it so much. Anyone ever do that? Have you ever done that? No, you would never do that. So why in the world would you do it here? You wouldn't. You can, but you're gonna run out of money pretty quick and lose money. Mistake number two is even worse. Not only are they buying after a rally in price, they're buying right into a price level where the chart already told us supply exceeds demand. Banks and financial institutions are selling. And whoever is selling, it doesn't even matter. The reality is, according to the picture on the chart, there's overwhelming competition to sell up here. So why in the world would you want to buy there? Does that make sense? And for those that are new to this, I can give it to you one more way to help you understand and help you really start to own the knowledge and the skill. If you're, buying here, well, let me come back to that in a little bit. But the other way, well, I guess the other way to think about it is, when you really bucket it into those two groups and understand that everything on a price chart represents either unfilled orders, our supply and demand zones, or filled orders, which is everything else. You understand that everything on a price chart represents those two things. Now it becomes easier to identify and execute the strategy. Because it's not like there's a third thing on the chart, right? Is there a third thing on the chart? No. All of these pictures, all of this, I could scroll on forever. But all of this stuff represents filled orders or unfilled orders, doesn't it? That's why we need to, start to develop this razor sharp focus on just answering those two questions. All right, let's move on to another market. Like I said, I can look at any market you want to. And so if you have a market you want me to go to, let me know. Otherwise, I can run through my list here. And I thought we'd probably start with the Forex markets. Certainly start with the dollar. But again, if you have others that you want to go to, just let me know. Let's get back to that dollar here. Oh. So real quick, some larger time frame context. If you've been in our sessions this year, here are the supply and demand zones we've been going over. We've turned in supply, gone down to demand, and turned higher. Now we're just sitting kind of in the middle. Bringing it down to a smaller time frame, we do have in that middle, okay, we do have some supply that we're up against again here for the second time, meaning it's a lower probability level for two reasons. One, it's in the middle of that bigger time frame, right? And number two, we've been to this supply zone twice. Could prices fall? Sure they can. But I'm just saying, even though the picture of the supply level looks great, the odds are not overwhelming. Okay? So having said that, let's look at some other markets related to the dollar. And sure, we can look at the, you want to look at gold? A couple people want to look at gold, no problem. Over to gold. We can look at the gold futures. We can look at GLD. Doesn't matter. I think some areas that you need to be, now first of all, one thing you need to notice in gold is the last 3 weeks, we've been trading in the same range here. So gold really hasn't moved. However, once it does start to get going, I guess it's drifting lower now. Keep in mind we have a demand zone sitting just below in gold, around the 1428 area. And we have a nice profit zone up to the supply level that you see here, though there is a little supply zone before that that I'm going to show you in a moment. So we're looking at a much larger time frame here, but you need to be aware of this area sitting below because it's not that far below. And we're not together every day in these sessions. So sitting just above current price, like I said, I don't know if I mentioned this one yet, but there is a little supply zone up here. Oops, now we're trading a lower off our supply up top, but sitting down here, we do have a supply zone at 1484 up to 1496. That's 1484 up to 1496. With a nice little profit zone below. I thought there was one that was even, if you want to look inside that level, you'll see there's really two levels sitting on top of each other in there. Again, all of this is in the middle of the range, so it's not high probability, but if you're okay with the risk, it's not a bad opportunity. Obviously, if you're sitting in the dollar from one of our bigger time frame levels, that's obviously the place to be in, but these other levels are fine. Both are not that far from current price, very reachable. Okay, we just looked at the Aussie dollar, but we can look at it again. Why don't we look at the spot market? And as soon as these charts catch up, we'll be good to go. Let's see here. Not sure what's wrong with these charts. I want to go back to the, let's go back to the futures. It's the same market. So one thing to be aware of, we're looking at the 4-hour chart here. We do have a demand zone here, but keep in mind, you're into this level for it's like the third time now, right? We just touched this level, had a nice rally, offering about 3 to 1 or so. Now we're back down into this area. So prices can go a little lower. And if we go to chart, there we go. Oh, we had a demand zone down here, but basically what's happening is prices go moving from our supply zone here down to the 60-minute demand here. Don't be surprised if price does come down to this 67.20 area. If we get it, looks like the chart is suggesting we could get a nice little bounce out of that area once again. Yep, let's keep looking. Let's keep going. We can go to that the euro against the Aussie, not a problem. From here, we'll start with a chart that's just nice and clean. No levels on it or anything yet. Okay, let's start with the bigger time frame real quick. So obviously the weekly chart doesn't show us much other than prices right in the middle of the last, few months range here. So having said that, let's go down a few time frames and look for some levels that are maybe, since we're in a range here like this, maybe let's look for some levels down near the bottom of that range. So when we do that, we come across this one right here, which is good because it's below the the last few days range, right? This area in here. There we go. So we have a little bit of demand here. See all this trading activity in here? What does this picture represent? Filled orders or unfilled orders? The stuff that I'm kind of circling up here. That represent. Filled orders, yes. So that is likely this stuff right here in the middle. And then this area right here, those would be considered unfilled orders or supply and demand, which suggests that they are sitting likely down here. Okay? All right. Yeah, AD is Aussie. Uh-huh. Yeah, Giovanni, I don't know that I would buy at that demand zone again if that's the level you're talking about. I'm not sure. Yeah, so let's keep going. Let's go. Looking at the pound, which really has not moved, just be aware that if the pound should happen to rally, don't forget about our supply zone that's sitting up there just above 130. Literally just above 130. We already have some secondary evidence that that there's supply up there. Then of course coming down to the smaller time frames, you're not going to find much in here until you get out of that range. So we've got this 126.80 area. It's okay. I'm a bigger fan of the 124.90. So it's 124.90 right up here, down to 124.30. Okay. We've got that daily supply above. We've got these smaller time frame. Well, this is a 4-hour chart if you want to find them on your own screens. These demand zones below. Okay. So looking at the euro, I know some people are looking at these levels here. We've had this before, but keep in mind we went so deep into this level and rallied all the way out. Now you're back in it. This is not a high probability area to buy into. And sitting just below that, this daily, demand zone. We've been here a few times. Sure, you could get a bounce out of this area, but if you look at these levels, well, we'd probably want to go a little bit lower before expecting a bounce out of that area. Yep, we can look at let's look at that. New Zealand against the US. This one, for quite a while, we've just been trading lower off of our the supply zone that's easily seen on the daily chart. So given that there's probably not much supply left, what we want to do is see if we can find a demand zone below current price to buy at. The challenge here is there's nothing close to current price that's fresh. So that suggests that the New Zealand dollar could just as easily, fall down through all this stuff, fill this gap, and even not stop here because we've been here before. Nearest quality demand zone we'd be looking at here is down in this area right here. Okay, that's 62.95 down to 62.79. Okay, and that's the 4-hour chart of the New Zealand dollar. So that's a buying opportunity. And but again, don't forget about this larger time frame supply here. So we've been here a few times, which is why it might be okay to buy not too far below that. Next time up into that area, the likelihood is that it goes through it. Yeah, I see some questions in the chat. So the strategy you applied equally on any time frame for any financial purpose in any market. Stocks, futures, forex, options, bonds, real estate, crypto, doesn't matter. All of that. All right, so with that, let me do this here. If you have any questions or challenges, there's my email address, sam.seiden@tradingacademy.com. See, we're out of time here. But I wanted to take it kind of slow today and sort of do a kind of back to basics, just focus. So hopefully that was helpful. And again, the goal of all these sessions is to get you to stop thinking and acting like a retail trader and get you to start thinking and acting like a professional. There's my email address. If you have any questions or comments, let me know. And we will see you next time. All right. Have a great day.